Welcome back. My name is Chris Southworth, Secretary General of the International Chamber of Commerce in the UK, and welcome back to the C4DTI Digital Trade Conference and Awards. I think we'll get started. People are still arriving, but we'll let them come into the virtual room as we open up. So we've just had a terrific session talking about pilots and actually hearing all sorts of new business cases for digitalization, particularly in the food and drink sector. Talking about the importance of provenance and traceability, food security, food waste, and again, a strong connection to the sustainability agenda, which we heard a lot about yesterday. But I think we're getting real insights of practical examples now, practical business cases that I think the next stage is to really open that up and allow that information to get into the market. And then some really interesting kind of points around data, the use of data. This is an opportunity to think differently about data and to also think about the processes. What kind of processes are we currently using in trade, and what processes could actually be removed if we just use data a bit smartly, and instead of asking for data all the time, using signals and connections across government and the private sector as a way to simplify the process. Really, really interesting. This is the penultimate session, so we're going to again focus in on pilots. Lots of questions have been asked of us in the last year about, what's going on in these kind of practical initiatives. This is another opportunity to listen to some of the people who are actually delivering the work in different jurisdictions, crossing over the borders, and all the opportunities and challenges and benefits that that's bringing to varying different companies and sectors and industries. So I'd just like to invite Nick Davies, who I hope you all know well as the director of the C4DTI, to moderate the session. Over to you, Nick.
Great, thank you very much, Chris, and welcome to this session 9 of our Digital Trade Conference. And I'm very pleased to have a very distinguished and experienced panel who are asked to turn on their cameras and introduce themselves in just a moment. But just by way of a little bit of introduction to this session, we've, as Chris said, we heard just before in the previous session about the sort of business use cases and the experience of those in sectors like food and critical minerals, but critical to much of the digitalization of trade and indeed the facilitation of trade is, of course, trade finance. And the people on this panel are those who are actively and practically involved in the development of digital mechanisms for the access of and deployment of trade finance across the globe. And we've also referred specifically to Singapore, and that has indeed been the focus for the centre in our first year of operation. And there are 2 reasons, at least for that, well, maybe even 3. The first is because the Singaporeans have been very proactive in the development of digital processes in their own right. The Monetary Authority of Singapore, as you probably know, have been active, as has IMDA, the digital arm of the Singaporean government, and they've developed their own trade framework, digital trade framework in trade trust. And secondly, we have the UK has signed very recently a digital economy agreement with Singapore, which is generally regarded as a world leader and an exemplar of its type. And the centre had been working with the Singaporean government under the terms of that digital economy agreement. And we are answerable to a steering group that is made up of representatives from both the UK and the Singaporean government as we progress with our pilots. And I guess the third and perhaps more general reason is that the role of Singapore is very similar in the Pacific, is very similar to that of the UK in the Atlantic as a trading and capital market hub. So there are lots of reasons why those 2 roles can replicate each other and we can learn from each other. Not everything will be exactly the same, of course, because it is quite a different type of jurisdiction, but there is quite a lot in common that we can learn from each other, particularly in the context of our recent accession to the PCTPP, of which Singapore is also a signatory member. So that's the background to this, and I hope what we'll focus on today is the practical work that has been being done by the representatives on this call. If I could ask them to turn their cameras on, I shall introduce you to John Boren, who's the Director, Trade Innovation and Solutions Development at Lloyds Banking Group, Anthony Wadsworth Hill, who is co-founder and Deputy Chief Executive Officer of Mercor, Merlin Dowes, who is Executive Director of Trade and Working Capital at JP Morgan, and also the Vice Chair of the ICC Banking Commission, and Patrick Zecker, who is Chief Executive Officer of Inigio and a sponsor of the conference. So with that focus on practical work, I would like each of you, if I may ask you to introduce yourselves, say what you've done, so why are you interested in this area, both individually and institutionally, as it were, and tell us a little bit about the actual pilot work that you've done. John, starting with you, if I may, and perhaps your reference to the electronic promissory note work that you've been doing in this space.
Yeah, hi Nick, hi everyone. So yeah, as Nick said, I'm John Boran, work for Lloyds Bank. I've been working in the innovation and solution development team there for about 3 years now, and I think I've worked on pilots with everyone on this call at various stages over those 3 years. Previous to that, my background has been in trade for the past 15 years, mainly in the back office operations. So the work we've done on the promissory note, Nick, I'll probably start with the work really we first did with Inigio and with yourselves in the government was more around digital guarantees to begin with. That was the initial simplest use case that we looked at. So we looked at the possibility of digitizing guarantees that we issue as a bank into HMRC using Inigio's Trace Original solution. We did a pilot a few years ago on that. We were looking at actually doing certified true copies of these guarantees. We kept the original paper ones in place due to legal requirements at the time. And we were able to prove as part of that not only the solution worked, but also that we were able to meet the goals of actually reducing the end-to-end time of issuance using digital, which was exciting and interesting for us all. When we were looking at that use case, I think for the majority of guarantees under English law, possession isn't key for the guarantee. It doesn't give you inherent rights like it would for a negotiable instrument, or such as a promissory note or a bill of exchange. So we as a bank actually found that the majority of guarantees we issue, there are simpler ways that we could potentially digitize those instruments, and we've recently launched a paperless guarantee initiative that is a simpler proposition, but we're seeing 1 in 4 of the direct guarantees we're issuing now moving over to paperless, which is great to see. But we had a great experience using the tech with Inigio, and we were keen to look at other use cases. So in 2022, we began work looking at paperless documentary trade. We reviewed a vast number of use cases across all of the different products. And we centered in on what we call promissory note purchasing as the initial use case. So the structure we were looking at was kind of a reverse forfeiting structure. We do a number of transactions in the house building sector for key clients that are buying land, and they're buying land to build new build houses. They do this by issuing promissory notes in favor of the landowners, and then we then add our guarantee to that promissory note. We avalize the promissory note, and we get instructions from their counterparty, the seller of the land, to purchase that promissory note from them. Historically, this has always been done on paper, and there are pain points inherent in that. So the paper has to be collated by the buyer. It has to be sent normally via solicitors, but to the sellers for endorsement. That document is then normally forwarded back to the buyer to collate with other documentation and sent to the bank to then purchase that note. So we've found that, you know, paperwork typically is couriered about three times in any transaction. And, you know, it takes around a week to get all of that paperwork lined up in order for us to make the purchase. So we were keen to look into this as a digitization use case, because we thought, one, it was a simple transaction. It was a three-corner model transaction. We were the only bank involved. All of the parties tend to be domestic in the transactions, and there are minimal documentary requirements, unlike a collection or a letter of credit. We're not worrying about transport documents or other supporting documentation. But not only that, we also thought that it was a case that there'd be tangible benefits for the client. We really thought we would be able to make the process a lot more seamless and quicker for our clients. So one of the key things we looked at around that time, we joined the DNI initiative, the Digital Negotiable Instruments Initiative that ITFA launched. There was a fantastic white paper on DNI, DDocs, and EPUs that was written by ITFA with support from Sullivan and Worcester. And we basically took that paper and looked at that and said, like, can we build a kind of EPU structure in a contractual law format ahead of law change to deliver a digital version of a promissory note, albeit subject to contract law. So we went ahead, did that. The first transaction was completed last August as part of a pilot, and since then we've done a number of transactions, and we're now out of pilot. Some of you may have seen there was a press release yesterday that we've signed a contract with Asia. We've entered a longer term relationship with them, and we're really keen now to build on those transactions we've done. We've done a number of promissory note transactions. I think the next kind of steps for us are getting ready for the law change. As I said, the white paper is great. The EPU, it's a great structure, but most of you would have seen promissory notes before, and they're a paragraph or two. This is about a page and a half of text. This can be simplified from a documentation perspective once we move to, you know, the Electronic Trade Documents Act comes into play. So getting ready for that law change and transacting under common law is one of our key next steps. And I think four corner model transactions is another key step we want to make. So this does give us options both for primary transactions where one party takes on the guarantor role as avalizer, then one party discounts, or a secondary transaction where we complete a whole transaction, or another party completes a whole transaction and then sells these down, because the paper does not have to move like they do for these transactions normally. So the key thing for us is collaborating with other banks, FIs and corporates. So I know we've got Anthony on the call from Merkle. We were really keen when we found out that they were looking at digital bills of exchange to share our learning from the pilot we did and work with them to try and support them in their journey. And it was great to see that they, you know, successfully issued the first EPU in bill of exchange format. So that's kind of, I think, where we are. I think we see the benefits of these instruments, kind of not that we don't see them as a product, we see them as a solution that can be fit into other products as well. Documentary LCs, collections, you know, this is a piece that can be added to those. And there are other key things that we need to do as well, you know, and I know we've been working with you, Nick, on the e-bills of lading pilots. It's a bit more complex, I think, than this, because the bank doesn't have as much sway, and it really we have to rely on the carriers to kind of set the course for that. But at the same time, you know, a lot of stuff to do, but we feel like we've made some good steps in the last year.
Excellent. Thank you, John. Yes, I like that idea of a solution rather than a product. This isn't just about doing, you know, digitalizing individual documents, because those are the documents that have historically been around. It's actually looking at wider solutions. And I think that's a great perspective to look at this through. So turning to you, Anthony, you mentioned that or John has mentioned that you've been working with Lloyds. Perhaps you could say a little bit about what you've been doing and how it's for a relatively small setup like Merkle to work with a great big one like Lloyds Banking Group.
Yeah, absolutely. So firstly, Merkle, we started around about 2 years ago on the Merkle project, and for us the business case for establishing Merkle was quite clear, and unfortunately the market had already done a lot of the research to support that business case, because it was primarily around the trade finance gap and the Asia Development Bank survey in particular, which focuses on micro, small and medium-sized enterprises, called out that I think 72% of respondents cited AML and KYC requirements and challenges as a main barrier to accessing trade finance for those SME entities. And Merkle is actually spun out of a successful compliance consultancy, Campion Wilcox Compliance. So that was a very natural fit for us, and that's how I got involved with the business. So we decided that we would actually start to take a look at these SME kind of use cases and look at why it is that they're so difficult or challenging to lend to. And primarily that came out as cost of service for an SME, and cost of service in relation to trade finance with its cross-border activity naturally requires a lot more investment in systems and controls around looking into non-customer parties, indirect parties that you may get involved with under a trade finance transaction. And as we had the benefit of experience through our sister company on the compliance side, we built out a platform for ourselves initially to be able to serve SMEs at a lower cost of service. So the next part for us was then to work out how we build our digital trade execution platform. Because as a startup, we have the benefit of not having lots of legacy systems. So we have a blank canvas, and quite frankly, this is one of the great things about this industry that we work in. The industry has served this up to us on a plate as a new entrant, as a new non-bank financial institution in that space. Obviously, there's all of the great work going on by the ICC and the Law Commission around the Electronic Trade Documents Act, or bill to become an act, but also the other work around the International Trade and Forfeiting Association. So John, you mentioned the ITFA Digital Negotiable Instruments Initiative. That white paper, that piece of work, laid the whole foundation for us to review how we can bring on board those reliable systems and under the DDoC specifications that allow us to execute a digital trade transaction that has those features that allows you to maintain control and possession throughout that. So that actually took us down a path where we knew that Enigio had the platform that met the requirements. We liaised with Lloyd's to understand their experiences with that and how it worked out well, and had naturally positive references with that. We engaged with Enigio very successfully for us to onboard their solution into our systems and controls. And then it comes down to the wording. So we looked at what Lloyd's had done around the first digital promissory note via the EPU, and we said, well, has anyone yet done the first digital bill of exchange under that ITFA EPU wording? And we set ourselves a challenge to try and do that and prove that can work, but also prove that can work in the SME sector, because I think sometimes there can be thoughts that perhaps this type of financing may only be fit for a larger ticket style transaction. So we really did want to prove that we could take that in a different way. So those components together, we had all of the research supporting what we wanted to do. We had good references around a system provider. We had the legal framework for the contract law based electronic payment undertaking with all the same features of bill of exchange, which Sullivan's done excellent work on alongside Sean and the guys at ITFA. we just then needed to find the client and the trade flow to apply this to. And again, we have been quite fortunate with some of our initial pilot client base, and we had and the company Abacor was the company that we first worked with around this. They are a sugar trader and have a lot of active flows in and out of the UK and Europe across, but also spanning into Central and Latin America from a sourcing point of view. So we kind of work with them and their supply chain to try and find who may be a willing participant to engage in this digital first. We had worked with Abacor, and we had got them across the line to use this technology, and we were kind of set the challenge really that so the problem for them was that they buy sugar from overseas, and they will be trading that to potentially an end buyer in the UK, as an example, a food manufacturer or syrup producer or something like that. And typically their shipment period is around about 1 month for that sugar to be loaded and get across into the UK. And the situation that they're faced in terms of scaling their business is that the underlying producer wants, like in any natural dynamic trade, the underlying producer wants to get paid as soon as possible, and their end buyer wants credit terms. Now, Abacor also as a trader, they're in comparison to the size of their end buyers, they're a smaller style entity, and their end buyers may be larger and have more credit deriving capacity around that. So we, rather than looking at them like a traditional corporate loan lend, we just applied what is familiar to a lot of the trade financiers probably on this is well, how can we leverage the receivables? How can we look at what receivables their business derives and generate a more cost-effective approach to that business? But there's still the element around they wanted to get they had a 30-day shipment period. Their underlying supplier wants payment early, but by the time, if they had executed a paper bill of exchange, it would have probably taken 3 weeks to execute through the courier process.
Yeah.
And then by the time there's actually a negotiable instrument there to discount by us, there's only 7 days left, and it's not worthwhile or meaningful to discount that. And this is where the digital execution really came into play. Yeah. We were able to we'd already onboarded Abacor and done our due diligence around the other parties. So when it came to operational execution, we were able to do that within 2 days. And the only reason it was 2 days was because it was over a weekend. And conceptually, we could have done that same day. But it meant then that actually under the expected shipment period of around about 30 days, they got 28 days worth of liquidity there. Brilliant. So it actually created a trade finance opportunity that didn't exist before. The parties involved didn't even think that this could be an option for them. So part of this is also about education. It's definitely about solutions and applying new technologies into those use cases.
Brilliant. Thanks, Anthony. There's a clear business case there, and you've actually quantified in very real terms the speed and the cost benefits that can accrue to your SME clients. And so Merlin, you're quite a veteran in the sort of proof of concept pilot line. Anthony referred there to risks and controls, and as a regulated body, JP Morgan will be have to keep aware of their regulatory restraints and so on. So how have you approached the exploration of these sorts of digital solutions from the point of view of a big institution like yours?
Sure. Thanks, Nick, and morning, afternoon, evening to all. Greetings from the state of Texas in the US. And Pleasure to be here. So I cover, for JP Morgan, my role is I lead a team covering the digital solutions that operate and serve the needs for traditional trade finance transactions for both FI and corporate clients. Also, as Nick had mentioned at the beginning, I'm a vice chair on the ICC Banking Commission, where I sponsor a working group on the commercialization of activities. So we have one work stream looking at the e-rules, EUCP, EURC, URDTT, where John is a very active participant from Lloyd's and contributing there. And then we have a second work stream, which has actually just kicked off, and you will have seen that the ICC DSI has released the key trade document data sets. And I'm leading a working group that's validating these data sets on behalf of the banking industry. With that said, so as Nick had alluded to, I have some experience with pilots or POCs, however you want to, what terminology you want to use. And this started back actually more than 10 years ago, back in 2012, when I orchestrated the testing of the URBPO and the TSU tool with a number of fellow banks across the globe. And the aim was to provide feedback to both SWIFT as well as the ICC as the rule setting body as to the practicality and the use of the rules as they were drafted and the system capabilities. I'm not going to go on to what happened with the BPO since then, but that didn't deter me from picking up and trying this again. So back in 2020, I picked up and led an initiative to test SWIFT File Act. COVID, everyone was struggling with physical paper being shipped around the globe and so forth. So Lloyd's, Citibank, Deutsche, Standard Chartered, a number of other banks, we all collaborated on testing the SWIFT File Act capabilities, which JP Morgan had actually done a test the year prior in Asia, specifically just with DBS. The focus was on commercial letters of credit and that you could actually use existing technology to share images, right? This is PDF images of documents under commercial letters of credit, and how would the UCP 600 or the EUCP 600 rules apply. Outcome was it's chapter 5 of SWIFT's solution for digital exchange of trade documents, which was released back in January 21. So, and that's how we helped, look to collaborate with partners for the better of the overall industry. Those are some success stories. We did have some rather not challenges and less successful adventures. One was in a specific Singapore pilot where, unfortunately, due to the size, infrastructure, technology, risks, controls that we have in place, we were unable to implement or access the required technology to support this pilot, right? So as you think of going down into pilots, one of the key questions is around the technical solution, right? Is this something that is acceptable within your risk and control framework? You'll need to engage your technology partners to make sure that you can access the tools and so forth to execute the test environment testing, and make sure that it's in a test environment not impacting your day-to-day production, because that is imperative as well. Then now was it when everything started moving along on the legal reform in the UK and so forth. We have always been conscious of developments both in the UK, the US, as well as Singapore, because with my role in the ICC, I also work with BAFT and ITFA, and that's where we came across Enigio, and have had several, a good relationship back and forth over the past, I think it's almost 2 years. Patrick can keep me honest on that one, where we decided to say, look, there is something here, right? It's interesting. And internally within JP Morgan, it's more around the speed of execution, efficiencies, mitigating the risks associated with manual processes in order to, and ultimately it will benefit the client in the long run. But it's more also around, making sure that everything is sound from an internal perspective. So this is where we started trying to identify what's a good, valuable use case, right, for a tool such as Enigio's Trace Original. And we've boiled it down into a simple solution which revolves around the use of a bill of exchange, right? So it's is it the creation or is it the execution of the bill of exchange? And it's what we can control ourselves. So that's how we decided to, venture down this path of testing Enigio and their solution. But with this come a lot of internal challenges from an organization such as JP Morgan in terms of roles, responsibilities, documenting the test cases, right? So what are you looking to test? You need a positive outcome. Also, we need to make sure that we get a touch on the negative outcomes, right? So it's kind of the stress test scenario, and what if it goes wrong? And over the years of implementing various solutions, I've always made it a point to say, you got to try to break it, right? And make sure that it doesn't break. So then you get into the roles of who's going to do this testing? Who's going to do the pilot, right? And depending on the size of the organization, this may be housed within just a small team in operations. Do you have a dedicated testing unit, right? And then, or is it someone within product? I don't know, right? With us, we've spotted it around the organization as well. And again, going back to, it's more trying to break it down to something simple, something that you can control and achieve and so forth. This has now led us into the next phase in terms of that if we have this bill of exchange, and one of the key things that for us that we would like to test, and we're exploring this at the moment, and this is key to the bill, is the transferability.
Yeah.
Right. So, I compliment Mercor and Lloyd's on creating, the digital negotiable instrument. But for the industry, it is key that one is able to transfer the instrument as well. So we are exploring opportunities at the moment with Lloyd's to test this specifically on the Enigio platform and the various flavors to this on how this could be done. But again, in speaking to legal counsel yesterday on, this specific point, there are some key conditions which need to be satisfied in order for this to be something that the industry can take forward. So I think in terms to setting up pilots and proof of concepts or proof of values, it is challenging. One has to be clear as to who are the roles, responsibilities, who's leading. And I think one thing, we're all competitive, we all have a commercial acumen. Lay down simple, it's either we all sign an NDA to start it off, right? Or make it clear that you operate under Chatham House rules, right? That and things that are being discussed and created are free to use and so forth.
Yep.
But, I think that's a bit of what I've done in the past, some tips on how to take this forward. And yeah.
Thank you, Merlin. Yes, and that's precisely the role that the centre is trying to perform here, is to enable, to the extent you're not already doing it, and by the sounds of things you are, is to enable you and other stakeholders to get into a pre-competitive space, as it were, do the collaboration and the experiments that we need to test this, and not be afraid of failure and learn from the lessons. That's brilliant. Thank you very much, Merlin. So, without prompting, each of the three other panelists seems to have mentioned Enigio quite a lot, Patrick. So no pressure there. So you're obviously something of an underpinning capability that has been used by each of the other three panelists. Perhaps you could say what it is you've done that has enabled you to be involved in this sort of experimentation, and how you have used your technical capability to provide the legal assurance to big banks and others who are regulated that this stuff can be safely done.
Thank you very much, Nick, and thank you for having me, and also for a very nice event which you have held during the course of these 2 days. Pleasure to be here. So yes, I'm Patrick Secker. I'm CEO of Inigo since almost 1.5 years back, and having my background in banking, and particularly in trade, supply chain, working capital, export and project finance, in various banks in the Nordics, but also in Asia. This is of course an area which is close to my heart. I think just to tap on, because almost all good things has already been said by the distinguished colleagues here. I think if we start with the legal part, I can tell a story about the company. The solution was actually developed originally to address the Swedish Debt Instrument Act from something like 1934, or sorry, 1834, and so that was the starting point, and the idea around the digital trade documents came by coincidence a couple of years back, when the tech team was involved in a international science project, where one of the participants congratulated Inigo on having fulfilled the requirement of UNICETRAL's model law. So that was actually, the starting point for taking the challenge of addressing the digital trade documents area. So I think from our position, where we're coming from, a couple of things has been key in providing a capability to digitalize the trade documents. And there are, I think, one key area is to address the design part in a good way, because there's a couple of key requirements needs to be fulfilled. It needs to be scalable, as you said. It need to address the legal challenges, but it also, I think, taking experience from history. And that I think we should be very particular with its experiences. This is an evolution. So I myself has been very involved in and been in the board for WeTrade, and was involved in 2017. One of the experience gained is, how do you address the network effect? That was discussed also in a very, very good panels yesterday on not being hostage to the network effect, because then everyone will be stuck in the first mover disadvantage. If I share my data on a platform and no one else is there, what's the benefit for me? This will only have a value when it's reach a certain point.
Yep.
So we set out to address to be as agnostic as possible, but still fulfill the requirements. And I think agnostic is an important word, because you need in trade, given the multiple dimension we're dealing with in relation to counterparties, industries, type of documents, and you can put the matrix. And you also did in the latest white paper sent out from ICC on number of documents, number of parties, number of jurisdiction, number of. So agnostics in the way that you need to cater for all types of documents. Then it's up to the user to decide which documents is their business case best suited for. And I come back to that because that's, I think, some key learnings here. And secondly, agnostics to the processes, because it's easy to build a technical solution which dictates the processes, and then everyone needs to adhere to that. But in this field of business, there is multiple processes to be adhered to. And if everyone going to change the processes, it will be very, very challenging. So don't let the system dictate the customer's process. Let the customer set the technical systems processes. When I said I was coming back on the different approaches you can take, I think it's very interesting to listen to Mercor and Lloyd in relation to how they have attacked this from two different perspectives, and that's really important for us because we're learning a lot, and this is what it is. It's a collaborative game where Mercor actually filled the gap of something which was not existing prior to they find a structure to fill that gap. And the other is maybe you need to sort out some efficiency gains in the current process. So you keep, and there are multiple variations. So that is also a reason for, stay agnostic in the processes which the solution provide.
Brilliant. Thank you very much,
Thank you.
Patrick. Yeah, so I think that delivery and technological agnosticism is critical, I think, so that we don't end up in a trade lens type situation where everybody has to buy into a particular solution. So there's clearly a lot going on between the four organizations involved here, and that's brilliant. John, I just want to come back to you. Do you see the banks as being a sort of driving force in the advancement of trade digitalization? It seems to me there are a relatively small number of well-regulated and quite homogeneous sort of members of the supply chain and trading environment. Do you see yourself, does Lloyds have an ambition to be that driver and to be some of the instigator of that move to doing things differently?
Yeah, Nick, I think definitely there is a role for us there. And I think particularly, in the documents we've been talking about today, that the financial negotiable instruments, we're not the issuer of these documents that we're talking about, bills of exchange and promissory notes in the transactions that we've been talking about, but we're only one step removed from the issuer. So, I mean, one of the great things with the way we've been able to set these up is that we've not only have we digitized the document, but we've been able to take away a lot of the logistics from our clients as well. So, as I was explaining before, the burden was on our client, the buyer, to collate all the documentation, to create the documentation. We've been able to set this up with our access to the Trace Original platform to actually effectively just create all of that documentation for them, and they effectively sign it digitally in our digital premises. So that's been I think that's useful, taking out the logistics for the corporates. And I think one of the things probably, and I'm just as fault of it as many others are, but we get very excited about the digital firsts we're doing and the changes in trade, EUCP, etc. As Mona mentioned, it's a passion of mine. But for clients out there, they're just focused on the things that matter to them. Can we make the process quicker, more seamless, more cost effective for them? And with the digital promissory note that I mentioned earlier, we were able to go out to our client and say, you're going to get paid quicker if we do it this way, and that's the main thing they care about, really. So we have to kind of build that case, I think, for the corporates. We're going to do all of that legal work, operational work in the background to make sure it adheres to all of the underlying trade rules and legal frameworks. But ultimately, we need to keep our eye on the prize, that we need to prove for the clients that this is going to make things tangibly better for them, which I think the use cases have just been described. It definitely has.
Yes, I think we need.
If I may, Nick,
yes.
Just to add on to this, so from a banking perspective, and if you start looking internally, the internal processes, that the whole trade finance industry is plagued with paper, archaic processes around the use of paper. And what do banks deploy? These are OCR scanning solutions in order to extract the data, because the data is gold. This provides, right, seamless processing where you can share the data with downstream systems to do your compliance checking, your KYC, your credit check, whatever you need to do, right? Now, so for a bank, it is imperative that you start to look at ways to receive digital structured data, whether it's off of a PDF or is it just a data feed from a client, right? Because this is the ultimate goal. That's what you need. You want access to the data so you can minimize the cost on having to OCR and extract the data off the physical documents, right? And then there are, of course, the risks of revolving around the existence of these physical documents. What happens if a courier package with bills of lading for a shipment of millions of dollars disappears? What, you know, and things of that nature. So this is why banks are very much like ourselves focused on the internal digitization of trade. We have deployed solutions such as ClearEye, which do compliance checking. They do automate the UCP check to an extent, right? Just make that clear. It's to an extent. The ultimate decision-making is still down to the individual, right? But it does shorten the turnaround times because, yeah, having an operation technician sit there for 8 hours scanning over a set of documents, or can I have a system do it in 15 and then the user does an additional 20 minutes, right? That saves a lot of money, it's efficient, and it gets the documents out the door a lot faster and facilitates swifter payment, and it gets the banking process up to where the physical supply chain is today, right? The speed of the physical supply chain is way faster than the bank network. So that's why banks would need to pick up on this, on the digital bandwagon.
Brilliant. Yes, and I hope that internal case can be met and provide that case for investment, I guess, in your own internal considerations in that technology. So Anthony, just turning to you, you mentioned the importance of providing solutions for the small to medium enterprise sector. How do we scale that? Deepesh has raised that question on the chat. You know, we still haven't really succeeded in landing the digital agenda with the small to medium enterprise sector, or at least not sufficiently so. How can we get the sort of solution that you're developing better understood and used by that sector?
So when we first started looking at the digital bill of exchange and looking at how that might be created, or how a paper version of that would be created today, you know, in most instances, the bill of exchange is drawn by the exporter. It's created by those guys upon the importer, etc. So it require those guys to produce that. Now, when we look at the Enigio solution that all of us on this panel are currently using, there's an element of setting up the infrastructure and everything else around that. If we are looking to drive adoption across the SME sector, we need to take that pain away from the SME sector.
Yeah.
So all of these various different electronic trade documents, we need to look at each one of those, how they exist in the paper world, how they exist in the electronic world, and work out who is best placed to issue these to drive adoption. And there may be differences depending on whether you're an SME or you're a multinational corporate. A multinational corporate might be very keen to have their own direct Enigio node and manage all of the contract execution, etc. But if we're digging into the SME sector, it's just not going to happen. So I think fundamentally the banks and financiers need to be taking on board those technologies that can create digital negotiable instruments. I think that's a very key thing to drive the adoption side there.
Brilliant. But there's also, I think, an education and an engagement piece as well that I hope that the centre will be able to help with. So Patrick, how do you calibrate your service to meet the needs of both the the biggest of the MNEs and OEMs, and the much the higher number but smaller SME sector?
I think Anthony had a very good point there. It's first of all, if we start with the banks, they have a very central position in the supply chain in many cases, where especially when they're involved, they're critical in the supply chain. So when I was in bank, I didn't think so, but now when I talk to carrier, shippers, freight forwarder agents, banks has a central role. Sometimes we don't leverage that. I didn't, at least, but I leveraged that role, because if you look at the document sets, banks are consumer of a whole lot of data. They issue some of the documents, but they are consuming a lot of data in the documents, and that is critical information. That, like Merlin said, the trade will not happen unless the checks and controls are there, and they are vouching for the whole supply chain, in fact. So banks has a critical role here. Also, freight forwarders and carriers have a critical role, because they also servicing corporate and SMEs, if providing the services. So there are different hubs where you can see where interconnector of the documents. We have been mapping out the point of creation of the document, but also dependencies to the documents, and we see the clear players here to create this infrastructure. And then in the future, of course, there need to be development into a simpler, cheaper, easier access to the digital documents. But for the time being, there are the critical parties, which is the freight forwarders, the banks, and in certain cases, larger multinational companies, which can handle their own, because they are having, or retailer, because they're having such a volumes of documents.
Yes, thank you, Patrick. So it's clearly a team effort that is required here, and we need to engage all of those groups of stakeholders in this. And it's no good just digitalizing one part of the process, because if you do that, you'll still have paper at both ends, and you won't get the efficiencies. I think that's the message that we've picked up loud and clear. So we're coming to the end of our time. Thank you very much, gents, for a very interesting discussion. Just before we finish, perhaps I could ask each of you in turn, just to see what do you think are the critical next steps, and where do you see things being in the medium term? John, what do you think?
So I mean, the steps I mentioned earlier in terms of digital documentation are the key ones that we'll be focusing on, and I think collaboration is the key. We need to work together. I think, as Merlin mentioned, transfer is going to be the key. I think one of the big benefits we've seen using the Inegio system is the fact that it's not a closed system; it's a solution. Only one party, who's the creator of the document, actually needs to have that relationship, and basically any party can create a key and then take ownership of the documents. And as Merlin mentioned, there's a lot of testing going on at the moment to test out those theories. I think it's worked really well for the simple, small transactions that we're doing at the moment. But as we build out the chains and of the transactions, identity is going to become key. How do we know that the person who's created a key on the Inegio website is the person they say they are, who we're receiving a document from or sending a document to? So I think that will be key. And I think in terms of like the next 5 years, it's very hard to say. If we look back 5 years ago, what's happened in the last 5 years, I think MLETR was just outside those 5 years. We've seen a lot of move with the law change, and that's very exciting. We're all hoping that will give us some critical mass. But even with COVID, happening in that last 5 year period, which was a huge disruptor, which you would think would have moved people away from paper, we are seeing it's only slow and steady, the move away from paper. And I think it is a customs thing as well. I mean, the law change is going to happen for negotiable instruments, but there are plenty of instruments today, like guarantees and other documents, that legally can be digital, but people are still transferring them in paper form. So that is key as well.
Yes, thanks, John. Merlin, are you optimistic?
Yes, definitely. But my recommendation to those listening is play in the sandbox. Get your bucket and spade. Go and play in the sandbox. Try these things out. Right. You want to test drive a car before you buy it. So why not test drive some of these solutions? I think from an industry perspective, key focus point is interoperability. Right. We're all talking about Enigio today, but with the law change, there will be other providers of digital negotiable instruments, right, or electronic bills of lading. And the key thing and the conundrum that's been plaguing the industry is interoperability. How can we connect these different systems? And that's the big challenge for the next 5 years from my side.
Yes, very good. Thanks, Merlin. So, Anthony, can you compete in an interoperable world?
Well, I think the interoperability aspect is the complex bit, and it's the piece for the banks and us as non-bank financiers to wrestle with. But I think the key here is, in the face of the customer, we need to keep it simple. Yeah. We need to hold their hand from the paper world to the digital world. We know that the end game is an end-to-end digitalized transaction. The cost efficiencies there are going to be humongous, and that's going to create greater commercial opportunities for the underlying lenders. But we need to get those SMEs comfortable with just one part, which is why I think focusing on, let's say, a payment instrument and get them comfortable with that. And then in the next transaction, let's do a payment instrument coupled with a digital bill of lading. And then we slowly grow confidence around that, in particular in the SME space. So my comments here is bite-sized chunks, and in terms of the scalability, Merkle, we've received tremendous feedback from the first transaction that we've done. We've got stacks of inquiries, particularly around the fact that not only was it a digital bill of exchange, it was actually, we didn't think we could appropriately fund this particular element of the trade. So I think there's masses of opportunity near, medium, and long term.
Brilliant. Yes, and fast two sentences from you, Patrick. Is there plenty of opportunity for everyone here?
I would say it is, and I think tapping into what everyone else said, it's a collaborative effort. Interoperability is important, that we learn from each other. I think this has been an extremely fast journey, and it's just picking up in speed as we talk. So we are expanding now, from 3-corner model to 4-corner model, and we are up to the full supply chain with 4, 7, 8 steps to handle. Adoption, yeah, I totally agree with Anthony. It cannot be a leap; it needs to be a transition.
Yeah.
So.
Yeah. Brilliant. Thank you very much, Patrick. Thank you indeed, all our panelists today. That's been a really interesting discussion. It's a team sport, as we said at the beginning, and I see that Chris has appeared again, which means our time is up. So, with thanks very much to our panel, I'll hand it back to you, Chris.
Thanks very much, Nick. Yeah, for an amazing panel. A couple of thoughts here. I mean, there's some running themes, aren't there, coming through all of these sessions. We'll talk a little bit about this in the next session, actually, Nick and I. There's some help on its way in terms of a test center that we're developing up in the Tees Valley, up at the C4DTI, to create safe environments to test things like financial integration. It's particularly for banks. Sorry, I mean, this idea of sandboxes. How can we do that in a safe environment, particularly around regulated industries, heavily regulated industries? So just bear that in mind, that those sort of resources hopefully will be coming on stream in the next 12 months or shortly after. There's also a legal question here too, that we've got a couple of countries, I'm thinking Japan and the Netherlands, who are effectively not adopting the whole Melita framework. So they're picking the sort of goods side. In Japan's case, it's just EBLs. So there's a kind of question there. Financial integration is going to be tougher in some places than others. If you haven't got the bills of exchange, prom note kind of area for those financial instruments, if that legislation is not in place, then we can only do the goods bit. We can't do the other bit. So that's something to bear in mind in terms of our advocacy especially to governments like Japan and Netherlands, where you would expect financial integration to be part of the conversation. even if it isn't in another country. So it's something that I think we all need to be a little bit alert to. Our message to all governments is, please take a comprehensive approach to this, because the scope for innovation is beyond just goods and transport documents. It's the financial piece is very, very important. What a great session again. I think, you know, the next session for everybody is at 3 o'clock British Standard Time. That's going to be Nick and I attempting to wrap up the last 3 days, share some of the conversations that we're part of that have been leading up to the conference, and give everyone some signals as to where we think the direction of travel is. So you're going to get an insight into all the conversations we're having. That's going to be quite challenging, because I've got pages and pages of notes of all the insights that have come out of the last few days, let alone the rest. But we're going to try and condense that down for everyone, and hopefully that will give everyone a clear direction of travel for the next 12 months and beyond. But thank you very much, speakers. Thanks, Nick. And thanks to the audience for joining us, and look forward to seeing you all at 3 p.m. for our last session of the conference. Thank you very much.
Thanks, guys. Thank you.
Thank you. Bye.
Bye.